Ladies and gentlemen, good day and welcome to Godawari Power and Ispat Ltd Q2FY26 earnings conference call hosted by Go India Advisors LLP. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sana Kapoor from Go India Advisors. Thank you, and over to you, ma'am.
Thank you, Sharmi. Good afternoon, everyone, and welcome to Godawari Power and Ispat Limited's earnings call to discuss Q2 and H1 FY26 financial performance. We have on the call Mr. Abhishek Agrawal, Executive Director, Mr. Dinesh Gandhi, Executive Director, and Mr. Sanjay Bothra, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Dinesh Gandhi to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Ladies and gentlemen, the line of Mr. Dinesh Gandhi has been disconnected. Please hold while we quickly get them reconnected. Ladies and gentlemen, thank you for being on hold. The management has been reconnected. Thank you, and over to you, sir.
Hello?
Yes, sir. Please go ahead.
Yeah. Hello. Thank you. Good afternoon, everyone. Thank you for joining us. This call today. Our financial results, press release, and earnings presentation are available on our website and on the stock exchanges. I believe you have had a chance to review the same. At the outset, we are deeply mourned and grieved by the unfortunate and unforeseen incident which took place on 26th of September 25 in one of our pellet plant, in which 6 of our colleagues lost their lives and 6 others were injured. Our heartfelt condolences to the family of deceased colleagues. May the departed soul rest in peace. The company has provided financial assistance to the families of the deceased. While no amount can ever compensate for the loss of life, Our support goes far beyond the financial aid. We remain committed to ensuring long-term security of the families of the deceased employees through employment opportunities for eligible dependents, pension benefits for no employable member in the family, and uninterrupted education for children through reimbursement of school and education expenses. Safeguarding their future is our highest responsibility, and we stand fully committed by the same. Now, coming on the GPIL performance, I am pleased to state that H1FY26 has been a period of consistent performance, strong operational progress. Revenue remained stable, supported by higher pellet and galvanized product volumes, while EBITDA and PAT margins stood healthy at 22% and 14% respectively, despite soft realization across the product range. On operational performance front, GPIL is well on track to meet its FY26 production target, despite loss of production of pellet for about 40 days due to the incident took place on 26th of September. While the plant was closed, we took the opportunity to prepone maintenance shutdown, which was in any case due in Q3 FY26. In H1 FY26, production volume of iron ore mining pellet, value-added steel products grew by 18 and 16% respectively, despite loss of production of 5 days in September. Pellet sales rose 30%, while value-added steel products saw a decline. Realization softness across the product, except ferroalloys and galvanized fabricated products. In Q2 FY26, production increased further by 23%, 29% for the mining, 31% for the pellet, and 5% for value-added product. Pellet sales surged by 71%, whereas value-added steel products saw a decline. The trend in realization remained similar, with only ferroalloys and galvanized products maintaining YOY stability. Coming on the consolidated financial performance, in H1, sales turnover remained largely stable, supported by higher production and sale of pellet galvanized products. However, EBITDA and PAT were lower due to softer realization. Even so, EBITDA and PAT margins remained robust at 22% and 14% respectively. In Q2 FY26, revenue, EBITDA and PAT saw a YOY decline, driven by higher sales volume of pellet and rolled products. On QOQ basis, however, these metrics were lower owing to reduced realization and seasonal reclass for iron ore pellet and finished steel. EBITDA and PAT margins continued to hold firm at 20% and 12% respectively. Overall financial performance of the company remained healthy and stable. Let me now update you on other strategic growth plans of the company. I am pleased to inform you that we have been able to move forward on getting much awaited regulatory approvals for expanding capacity of Aridongri iron ore mines from 2.35 million ton to 6 million ton per annum, and we have successfully completed public hearing for environmental approval. The environmental approval is in final stage now and expected by end of December 25. The 2 million ton pellet capacity expansion is progressing as planned. The pre-commissioning trials are underway and commissioning targeted by end of November 25, which is awaiting consent to operate from State Pollution Control Board. The entire work for the commissioning of project has been completed. The land acquisition for expansion of iron and steel capacity has been completed, with 452 acres of land secured for integrated steel plant and CRM complex. The 0.7 million tons cold rolling mill complex project is progressing well, with land acquisition completed and major equipment orders placed. The total cost of project for CRM project is 900 crore, of which 600 crore is financed through the debt and balance remainder funded via internal accrual. The company proposes to take up 1 million ton integrated steel plant post iron ore mining capacity announcement. The proposal for the same will be put up to the board after the production on expanded mining capacity is started. Godawari New Energy Private Limited, and wholly owned subsidiary of GPIL, has planned to set up 10 gigawatt battery energy storage system project in Maharashtra, for which land acquisition of 112 acres has already been completed. The cost of project is 700 crores, which is proposed to be funded via debt of 60% and balance from internal accrual out of equity contribution from GPIL. GPIL has already infused equity contribution to the extent of 175 crores, of which has been utilized for land acquisition and other project-related expenses. The board in its last board meeting has approved setting up an additional 250 megawatt solar power capacity in addition to earlier announced capacity of 125 megawatt for captive use in CRM project and integrated steel plant. The project is expected to be commissioned by Q4 FY27, coinciding with commissioning of CRM project. The surplus power pending use in Boria-Tibbu and integrated steel plant, the company proposes to use power from 250 megawatt solar for existing iron and steel operations by temporarily suspending thermal power generation. Operations at Boria-Tibbu mine resumed in May 25 following approval of updated mining plan. Additionally, GPIL received PGCIL approval for supply of steel billet for transmission-grade galvanized steel structures, a recognition of high quality of GPIL billets, now comparable to those of India's leading steel producers. Notably, GPIL remains the only company in India to provide fully integrated end-to-end solution for galvanized steel structure from iron ore to finished product. Coming on the market outlook, global iron ore prices have largely moved within $95 to $110 Brent this year and currently at around $102, $103 a ton. Weather-related supply disruption supported the prices in first half, while higher supply in the second half may keep further upside. Geopolitical tension continue to influence global demand through China's recent stimulus measures, including direct cash transfer to boost consumption, should offer some support for for calendar 25. Iron ore prices in China are expected to remain in the range of $90 to $105. The World Steel Association, however, project China's steel demand to decline by 2% in calendar 25 and 1% in 26 as the housing market stabilizes. On domestic front, iron ore prices, NMDC 64 AC fines have remained range-bound between 4,500 to 5,500 tons. Pellet prices have also been stable around 8,500 to 10,000 Brent, currently at around 9,750 rupees a ton, and likely to follow a similar trend in H2. India's steel demand remains strong, with World Steel Association forecasting 9% growth both in FY25 and 26, driven by sustained expansion across infrastructure construction, supported by initiatives such as National Infrastructure Pipeline, Pradhan Mantri Awas Yojana. By 26, India's steel demand is expected to be nearly 75 million ton higher than as compared to 2020. Taken together, our operational consistency, disciplined project execution, forward-looking investment highlight GPIL's readiness for next phase of growth. Backed by over 4 decades of industry experience, strong leadership, and committed workforce, the company stands on the foundation of strength and resilience. Going forward, as we scale our mining and pellet capacities, strengthen downstream capabilities, and deepen our renewable energy integration, we continue to build on a strong competitive position. Our solid net cash position, strategic capex pipeline, and strong ESG focus further support our long-term value creation efforts. With efficiency gain and cost savings from solar project, benefits of captive iron ore resources, GPIL is well positioned to capture emerging opportunities and deliver sustainable value to all stakeholders. I would like to now the floor open for question and answer. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vikas Singh from ICICI Securities. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. So first question regarding the pricing scenario. So if you could give us some idea what is the spot prices versus the 1Q averages. And we have heard some price increase happening recently. So could you just confirm the same? And lastly, anything you heard on the safeguard duty, which has provisional has been lapsed?
Hi, good afternoon. The prices, are you talking about our sales prices, right? Pellets, sponge,
yes,
and so on?
Yes.
Okay, so pellet H1 has been close to 9,500 average. And looking at the current demand and supply, we feel H2 also will be on the similar level because pellet demand in domestic market is still quite strong. Of course, there will be plus minus 10% on account of demand, but more or less it's stable. So DRI is about 22, 23 on the lower side. Billets were about 34 on the lowest. Right now it's about 35,000 rupees. And finished it around 38, 39,000. So prices in last, I would say 6 weeks or so have been close to rock bottom for this financial year at least. Demand looks to be picking up as monsoons got over. Now everything is, festivals are over. So hopefully in H2 we can see a better realization compared to H1.
Okay. And was there any 1,000, 1,500 kind of the price hike in the last 1 week in the longs product?
So, see, as I said, right, so slowly the demand is picking up. So what happens now, people try to, increase the prices in a haste. But if the demand is there, it sustains. It doesn't sustain, then, it rolls back. So that has been the trend from last couple of weeks where, the prices starts going up and then it comes on a little bit again. But I'm very sure things should improve from here on.
Okay. So any words on the safeguard duty which you have heard because the provisional has been lapsed and we are not sure by when the final notification would come?
No, not because since I'm not mailing to, that product of HRC, right? So I don't follow it very closely, but yeah, I think at the moment everyone's hoping it should come soon to support the industry.
Noted. So my second question is your strategy towards, using solar power to use in the future project as well. So that 250 megawatt solar power which you intend to use in the CRM, how should we look at what kind of the cost saving it will give and does it really make sense because that money could go for the new product or increase your overall volumes? So just wanted to understand what kind of the internal IRR on that project we are expecting at this point of time, especially when there's no premium on the green steel.
I'll tell you. So, see, if you don't install any power and we import power from the grid, right, my grid tariff will be close to about 8 rupees, 7.75 to 8 rupees annually on per unit basis. So when I calculate that, because, the CRM, it's a volume business, there's a lot of competition, but it's high value addition, but the margins are thin. We operate between 8 to 10%. So every penny matters, right? So if I import 8 rupees grid power and, give it to my CRM complex, so my operating cost will be on the higher side. Rather when I have a land available for me, which I can use, and I've been doing solar power since so many years, so I think this is the right way to invest in the solar power so that my operating cost goes down from day one. If not today, and plus, just to tell you that solar power plant will not only go for my CRM complex, in the long run, it will also be feeding to my second mine, Godawari mine, where we will be, installing power there as well because the mine tariff is close to 12 rupees. So it's better to put solar plant there as well. So this new 250 megawatt will feed to my CRM as well as my mine in the longer run.
Noted, sir. Actually, I was coming from the fact that a thermal power plant of much lower capacity and cost would have also sufficed your...
No. So I'll tell you, in that way, firstly, today thermal power plant is not cheap. It's 7 crores minimum per megawatt, right? Plus, as a company, we have decided we will not be going for any fossil fuel thermal plants. We have no intention of going back into that. We are very much happy in moving forward because sooner or later, I'm very sure with new government norms, new carbon tax mechanism which India has proposed, things will get, beneficial for us in the longer run. We will start getting the results of whatever we're doing right now. I'm very sure about it. So we have no intention of going back into fossil fuel.
Noted. And sir, until your own HRC capacity comes in, you would be buying HRC from the market. So what kind of margins do you think you would be making in CRM?
No. Just to correct, we are not entering into HRC market. Our new steel plant, when it goes ahead, it will not be making HRC. So we will be a long-term buyer of hot rolled coil from the market to feed to my CRM complex.
So what kind of conversion margin do you see at current spot basis? I know that the future can't be, predicted.
To be honest,
but at current level, what kind of the conversion margin do you see in the CRM complex?
That's what I'm saying. As we said, by the industry 10, anything between 8 to 10%. That's 10% is a very good number. I would say 70% is an average number. So even we have considered the same margin when we did our entire business planning. So we will be a buyer of HRC from the market on the longer basis, and we will be feeding and converting to value-added products. That is the whole idea.
Noted, sir. And sir, just one last question. Once the Ari Dongri mining capacity goes to 6 million tons, do we would have the need to run Boria Tibu simultaneously, or we will save that Boria Tibu for the future? So just wanted to understand our sourcing.
Boria Tibu is a low-grade mine specifically where the grade is, average grade is about 48, 47, 50, right? So the idea is we want to start investing in Boria Tibu because increasing the mining capacity will take a lot of time because currently that mine is, not connected with a lot of infrastructure, so that needs to be developed. And it will take its own sweet time. So the idea is in 3-4 years we start running a Boria Tibu to a decent level. So as and when we feel the bigger mines is not able to feed or there is a shortage, we can always ramp up the capacity. So today also if I start working on Boria Tibu, the next expansion can only happen minimum 3 to 4 days from now on. I'm looking at April 29 minimum from here to increase some of the capacity in Boria Tibu. So it's a long-term planning.
Very well noted, sir. I have more questions, but I'll come back to the queue. Thank you for answering.
Let me add one more point in this solar thing. This 250 megawatt solar, if you compare with the rate of 7 rupees and net cost to the steel plant at about 5 rupees 50 paisa, the internal rate of return is about 24%. So it is a healthy investment. And number two, if you want to do solar under group captive, then the point is that the land on which this project is proposed cannot be done under group captive because it has been allotted to Godawari Power and it cannot be subleased to any other company. So these are the two other factors for considering this 250 megawatt project on the balance sheet of GPIL.
Thank you, Dinesh. Thank you.
Thank you. The next question is from the line of Siddharth from Equirus Capital. Please go ahead.
Hi, sir. Good morning. So my first question is on the mining capacity. Now with Ari Dongri going to 6 million ton, when do we expect the entire crushing beneficiation come online and we should be at that 6 million ton run rate on an annual basis?
So hopefully we should get the final clearance from the State Pollution Board by end of this quarter, and from there on, so January probably we need a couple of months to get things back in order because we have been trying to manage till now because the EC has been delayed for 2 years. So we see a ramping up capacity happening from April 26, and next year 6 million looks difficult, to be very honest with you. Our idea is to reach 4.5 to 5 million tons next year, and then full throttle 6 million tons from January 27. That is the whole idea. To go ahead.
So broadly, so we are targeting the... Yeah, sorry. Go ahead.
Boria Tibu mines will mine about 5 lakh tons annually, out of which I'll get about 3 lakh tons of concentrate. So that will give me a decent cushion to operate my plant from my own captive mine, all the pellet plants.
So broadly, so we are suggesting that the beneficiation and crushing facility also should come online by calendar year 26 end, and we should be in place to ramp up the...
No. So see, we're already running a 0.6 million beneficiation plant. So the further expansion is just extension of it, So we are completely ready. Once we get the permission, we'll take about 4 to 6 months to get the line up and running.
Okay.
So we're expecting that by June, July, the full beneficiation will be in place, right? And since it's going to be monsoon, so you can expect from Q3 onwards, the entire beneficiation and mining will be at full capacity.
So at peak, given where our current capacities are on the expanded pellet capacities, what would be a peak iron ore requirement in 27 then?
You mean after 27?
In from calendar year 27 onwards.
See, so we will be producing at a current pellet levels. We should be producing anything, about 4.2 million tons, and assuming 15 to 20% yield loss on beneficiation. So we need about about 5.7, 5.8 million tons. So that is the whole idea. So we mine about 5 million tons in the first phase, take it to 6 million tons in the second phase, so that we are always 100% captive.
So we will broadly not use any iron ore for manufacturing sponge. We will still use pellets to manufacture sponge, or we might transfer something there also?
No, we cannot, because our mine is magnetite, and magnetite is not suitable to directly feed into sponge iron. The only way you can consume magnetite is through iron ore pellet route. Okay. So our DRA capacity will always run on 100% pellet.
So broadly, we should look at it that way, that at peak also we would be mining somewhere between 5.5, 5.7 million tons.
I mean, see, 6 million tons, and so 6 million, what is the idea is? So 5.5, 5.75, depending on, how the monsoon will play. But the idea is, whatever requirement we have for a captive pellet plant has to come from our mines. Okay. We're very clear about it. And we have no intention of selling any surplus in the market.
So secondly, in terms of the CRN complex, any timelines for both the CRN complex and the BESS plant?
See, so as we have informed earlier to everyone, so we're looking at the commercial production of April 27, which is FY28, for both, for BESS as well as for the CRN.
And in 2 years, we should reach at full utilization of that?
Sorry, come again?
So the utilization, we should reach near full utilization in 2 years of operation?
So see, because both things, for us it's a first-hand experience. So we are assuming a 50%, 50-60% PLF on the first year, and then from second onwards, we will be at 80% plus in both the plants for sure. That is the whole idea.
Okay. So, and given that now we will start work on even Boria Tibu mine, so broadly, 2-3 years down the line, again we will look at expanding our pellet capacities, or how should one think?
No. So the idea is the Boria will raise the capacity so that it can support our additional capacity requirement of in this new steel complex. So we might require 1 million ton because we might put up a sinter plant there. So the idea is to beneficate Boria ore inside the mine, reduce our wastages, and then straight away send it for usage in my new steel complex. So that is with my new steel plant.
So we will time the Boria Tibu capex also with the steel plant only. That is how one should think about it.
See, the capex is not very, very, very big. The idea is because there are a lot of approvals required, and new EC has to be obtained. So today anywhere between 18 to 24 months, and then 12 months you need to get the plant up and running. So that's why we started working on the Boria Tibu approvals, preparing a new EC, another document. Capex will only start happening probably 2 years down the line, nothing before that.
So last question on my side, on the steel plant, any timeline for the capex, or we are still some quarters away?
So see, as we had said earlier, for us to have comfort, for everyone else to have comfort, we are very clear. Once we receive the final approval of mining EC, then only we'll take it to the board for approval. Parallelly, we are very close to fine-tuning the capex. Last discussion with all the key suppliers. So for that as well, we need about a couple of months. So we are hoping, probably in next board meeting, we should be able to take up the steel plant for approval. everything goes well.
Okay. Thank you for that.
Yeah.
From my side.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Manav from Yes Securities Limited. Please go ahead.
Yeah, hi, good afternoon, and thank you so much for the opportunity. So first question is on the iron ore expansion at Godawari. Since you have already completed with the public hearing and are expecting approvals by December, what sort of volume can we expect? I mean, is there going to be any lag in the production once the ECs are in place?
No, there won't be any lag in the production because, from quite before only, we were always calculating the additional volumes to come up in FY27, which is April 26 Q1 quarter. So there has been a couple of months delay to obtain we thought we could get the EC by, Diwali. So that will not impact on any kind of production lag in this year. And there might be a little bit of overlapping because the monsoon is going to arrive by June, and we will need some time to, start adding capacities.
Got it. And on the pellet front, so by when do we see the commercial production to start for the new pellet plant, the 2 million ton expansion?
I think in a couple of weeks. I think by end of this month, we should be able to announce it to the stock exchange. We're just waiting for the final approval to go ahead. We have started doing the cold trial, which is very much permissible. And so I think in a couple of weeks, the new pellet plant should be up and about. And from Q4 onwards, we're expecting close to 80-85% of the capacity for the new pellet plant.
Okay, so the ramp-up time wouldn't be that long?
No, probably, a month or so, probably, 4 to 6 weeks.
Got it. So that is helpful. So additionally, with the incident which happened at the pellet plant, what impact on volumes can we expect? Could you quantify it, especially inclusive of the maintenance shutdown?
We did lose about 1.5 lakh tons of volume. Some of it was end of Q2 and entire October, so it will affect. But the good thing is, out of 35-40 days shutdown, 20-25 days were already planned in end of Q3, early Q4 as an annual shutdown. So that we did maintain the job this time only. Plus, with my new pellet plant coming in and hoping to ramp up by Q4, so the volume we had declared initially about 3 million tons, we are confident we can achieve that.
Okay, so on an average, we can expect like 820 tons, 20 kilotons per quarter. Is that how the run rate is to be looked at for the next couple of quarters?
Yeah, so I think January Q4 we should be doing about 0.9 million tons itself.
Okay, so any impact?
So whatever production has happened, we are very confident we can be able to cover it from our new plant.
Okay, got it. And so, since the mining is going to be a little, delayed and the pellet plant would already be up and running, so we can expect some merchant purchases of iron ore as well during Q3 and Q4.
Yes, of course. We have been a buyer in the market for about 50,000 tons every month, and with the new pellet capacity, there will be additional mining till mining capacity ramps up. But the good thing is, firstly, in today's market also, if you because there are other merchant pellet suppliers in the market who are buying 100% iron ore from the market and feeding to the sponge iron guys, there is still money to make. So that will also help us in the bottom line. We with additional EBITDA coming from additional volumes of pellet.
Got it. And so you had mentioned, in your opening remarks that the H2 prices for pellets are expected to remain in the 9,700 rupees per ton range.
Yeah.
How are the premiums on iron ore pellets looking currently? Have we seen some fall over there as well, or is it in the broadly range of 1,000?
There are no premiums as such. Specifically this Raipur market, there has been a lot of addition of DRI capacity, and the addition is still going on. Every month about 20-25 additional 1,000 tons requirement is coming up. So at the moment, Raipur is not able to feed the DRI guys. There is shortage of pellets in Raipur. So going forward, once a new plant comes to production, the demand supply gap will be quite balanced, and we can see the prices to be at the similar level. We don't see many, going up and down too much.
Okay. Got it. So just one last question. Could you provide me what was the landed cost of imported coal for the quarter?
It was about, so Q2, it was about 11,000 rupees landed to my plant. RB1 coal. 6,000 CD coal. Yeah.
Okay. And how is it shaping up in Q3? I mean, any impact?
So, initially, the market was on the lower side. The index had gone down below $80. But there'll be a little bit of current, but not much. So, we can see Q3 should be between 10,500 and 11,000 rupees. Because dollar has again have gone up, from 86 to 89 levels. So, that's also need to be considered. So, yeah, plus minus 500 rupees max. It's quite stable only, I would say, the imported coal as well.
Sure. Thank you so much, sir. All the very best.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Sahil Sangvi from Monarch Networth Capital. Please go ahead.
Yeah, good afternoon, and thank you for the opportunity. My question is more on the BESS side, bus side. I think we've heard announcements from Ola and Adani to enter this particular part of the project. I mean, they will be also doing something similar on this line. So, how similar is what we are doing and they are doing, and would that be a lot of competition to handle for us?
Firstly, whether it's Adani, Ola, GSW, so there will be a stiff competition in this, and we are very well prepared for that. Because we don't want to be, our capacity is designed such that we want to be probably one of the top 5 in India in terms of volumes, right? So we're very clear about the competition. Now, in terms of Adani, the announcement they had made, they also come back with a new announcement. The news is not totally 100% correct. So basically, 30 gigawatts, they are doing it for their own Gujarat project, where they're building up one of the biggest solar parks of 20,000 megawatts. So 30-35 gigawatt will be go for their captive consumption. So that clarification came from Adani in the economic times. And what Ola is doing, Ola is now trying to install a BESS for their battery charging solutions, where the consumers can reduce their power costs, their electricity bills, in a net metering concept. So the idea is same. I mean, the logic is same. That the applications are different for everybody individual. In our case, what we want to be doing is, we are not a developer. We won't be bidding in tenders of SECI. We want to be supplying containers and directly competing with other guys in India as well as imports from China. And banking, with government policies, the way it has been supported solar industry till now, those policies will also start coming in place as and when, the volumes in India start going up of supply. Now, there's a big mismatch of demand and supply. Today, India can supply over 10%, 90% is import. So when the demand supply starts coming close, I'm sure government will come up with policies and start supporting the domestic industry. So that is the whole idea on the best side.
Got it.
So just for your information, so Reliance is coming up with 40 gigawatt, but 30 gigawatt again is for their own, their own towers, telecom towers, right? So they'll be coming with only 10 gigawatt capacity in the market and competing with us. So eventually we will be also on the similar level. Our capacity also very big. So it's 10 gigawatt per stage only. That's how we vision it at the moment. Then the entire this particular business. Yeah.
Got it. And secondly, just to understand the kind of iron ore that will be mining in FY27, you said about 5 to 5.5 million tons. Is that correct? For FY27?
Yes. For FY27, since there has been a slight delay and with the monsoon onset, and so this year the monsoon was 5 months, right? So keeping all that in mind, we should be able to do somewhere about 4.7 to 5 million tons in FY27.
And
the expanded beneficiation plant of 6 million tons from 0.6 to 6 million will be up and about by, say, June, July, which is end of Q1 or Q2, early Q2.
Right. So the balance requirements, say, this year and next year, will be solely dependent on the market, or would there be some supplies from Boria Tibu also? I mean, how would
Boria Tibu supplies are continuing. We intend to, do a constant mining of about, say, 0.5 million from Boria Tibu, where we'll get about 0.3 million tons. So there'll be additional support of our own magnetite raw material. Rest, we will have to go into the market to keep running a plant. But I'm hoping this should continue max till probably, say, March. Because from April onwards, we will see additional volumes coming out of the mines.
Okay. And roughly the production target for FY27 would be 4 million ton for pellet, or would that be lower?
No, for pellets for next year, 4 million will be bare minimum. It might be on the higher side. We will analyze during planning of the next year. But 4 million will be bare minimum for sure, because we expect a 80% capacity utilization from Q4 this year only for the new pellet plant from January onwards. So that happens 80%. So from next year, it will be bare minimum 4 million tons, without a doubt.
Got it. That is good to hear. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Puneet Thakur from Plus91 Asset Management. Please go ahead.
Hi, sir. Good afternoon. Thank you for the opportunity. So, I had a couple of questions regarding our. So there is a sponge iron decline in production. So, are we utilizing it to make pellets and other stuff more? Have we increased the capacity to utilize sponge iron more?
See, so we are so currently our sponge iron is 0.6 million ton, and our steel capacity we do about a production of 0.5. So now we're installing a new furnace of 30 tons, which will require additional 50,000 sponge. When that is in operation, so I think from next year onwards, our sponge sale will be totally zero.
Yes, sir.
Sorry. Please go ahead.
And so there is a spike in our galvanized fabricated production and sales. So could you shed some light on why is there such a spike in that? We have done really well in that segment. So is there any market tailwind that we are expecting, or is there we are exploring new avenues where we increase the sales for that product?
We are. So around an additional capacity, since we got all the approvals from PGCL now, so we are ramping up the capacity of our rolling mill. We have also started taking, strips, which are basically used for the pipe segment, because since our quality of billets is like that. So we are hopeful from Q4 onward, we can see a substantial jump in the volume of RR for strips as well as for the galvanized itself.
So there is a decline in the sales of steel billets as well by 40% H1 over H1.
It was because in June we had taken a planned shutdown of one of our bigger turbines. There were modifications required to meet the new norms. Basically, State Pollution Board has recommended to all industries to revise their pollution norms which are allowed. So to maintain that, to complete the timeline, we had to take a 2-month shutdown of one of our power plants. So due to less power, the production on the billet side is less. That is the reason.
And so could you just shed some light that iron ore capacity in India right now would be a shortfall for steel makers in India itself by in recent years. So do you think that there will be a good price rise in iron ore sales and fines?
See, I think today, because of the mismatch, especially in the eastern belt, where which covers Bengal, Odisha, Jharkhand, and all, there is already a acute shortage of iron ore, and that is the reason, in spite of such weak steel prices, the pellet prices are still on the higher side. If you speak to any DRI guys, they would say pellet prices should be at least 1,000 rupees less from here on. But because of shortage of iron into India and the production is going up every year by 8 to 9%, so that's why the raw material prices in India are on the higher side and will remain elevated unless the supply starts improving from the iron ore side.
So 2030, a lot of mines are coming up on the sale in the blog. Hello?
See, mines keeps coming, but any virgin mines, any new mines auction, it takes minimum 3 to 4 years for operations and at least probably a couple of years to ramp up the capacity. So whatever happening, I'm sure the mines which got auctioned in say 21-22, they might be coming to production this year. But that's what I'm saying. The demand is much more than the supply which is getting added up into India. So government is concerned about it, and they're hopefully working on it.
So do you think the prices of iron ore and pellets and everything would be this would be the bottom price we are looking at right now, and this would go upwards from here onwards?
See, to be honest, on a very long-term basis, I think 9,000 rupees for us as a realization ex-plant on a longer-term basis is very, very practical. I don't want to, be very optimistic or, very pessimistic. I think 9,000 rupees if I get a longer term, I think it's a good pricing for the pellet people, for sure.
Okay, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Tony, Family Office. Please go ahead.
So regarding BSS, you'll be supplying to utility grade, if I understand. So have you already started partnership discussions with the developers who might be using this or bidding for this?
No, to be honest, not yet. Because we are still about 12 months away, 15 months away when we start supplying. But as we come close to the date of commencing the operations, we will think of having discussions with 3 or 4 big developers who are going very aggressive in terms of the volumes. So we have that in mind. But at the moment, because it's too far away our supplies, so it doesn't make sense to talk to somebody right now because competition is big, imports are still happening. So I don't think so. Even the other player would be quite keen on taking discussion very seriously at the moment. Once it's closer to the commissioning operations, then probably we start discussing. We have that in mind.
Okay. And your cells will be imported from China, but BSS, typically the systems are for a longer projects, whatever I understand, 5 to 10 years. So how will the warranty work in that case? Because you'll be putting in a container or assembling whatever you will do.
See, exactly. So we will be importing cells. So whatever warranty we're getting on cells, we will pass on to our buyers, back to back. That is the whole idea. And apart from cell, everything will be done in India. If you study the government policies, so PCS is already compulsory from India. EMS is already compulsory from India. So government is very proactive in supporting the domestic manufacturing. So only the cells will be imported. Rest everything will be from India only going forward.
So you basically say any issues come in wherever you're buying from China, they will be helping out with that warranty. And typically, what will be the warranty period if at all you're importing from China?
For cells, if you know the technicality, so for it's basically 8,000 cycles for 2-hour discharge. Basically, roughly it's about say 8 years, 10 years down the line, depending on the cell category. And for cells, because we do realize it's a very critical part of our operation. So we are only discussing with top air class in China and trying to enter a long-term supply for them. So that's how we're going to be procuring cells on a long-term basis with top A category suppliers only, like CATL, EV, lithium. These 3-4 we have identified, and we are at a very advanced stage of negotiation with them.
Okay, sir. Thanks and all the best.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Siddharth from Equirus Capital. Please go ahead.
Oh, hi, sir. So one more question on the fundraise, the preference issue that we had done recently. Any rationale behind that why did we do a preference issue?
Dineshji?
Yeah. Siddharth, there is no major rationale, but if I have done a preferential issue, it shows that 50% or more than 50% of this is taken by the promoters. So who else knows the business better than promoters? So promoters wanted additional equity in the company, and therefore we have gone ahead with the preferential issue. And this money, in any case, will be partially utilized for our upcoming projects. So this helps funding the project also without raising additional debt.
Any this thing that we are getting ready for the steel plant capex, and that is why we have done this capex in advance. Other special issues.
No, steel plant capex will be much larger. So this 500 crore of preferential issue does not fund my entire steel plant project. But definitely, this will help meeting requirements for BSES and CRM project.
So incrementally, when we go ahead with the steel plant, we will require incremental fundraising, or we should be able to do it from the internal cash accruals now?
No,
it all depends.
We will need to raise some debt definitely for the steel plant, and we will definitely raise the debt, and we'll see what is the equity availability with us and what is additional required.
So lastly, coming to our pellet volumes for 2H, so given that NMDC has also taken a price cut, we still believe that we should be able to maintain this range of pellet realizations going ahead?
100%. Because there is shortage of... you need to understand, although NMDC is a price cut, but the supply from NMDC is limited to a certain extent. They follow a certain system, they process, you have to apply for linkages. And there is additional requirement getting generated every month into this area because of additional capacity of DRI. So right now there is a shortage of pellets in the market. So meeting the volumes and the pricing, I don't see a challenge at all. At least for this financial year, the remaining part of the financial year.
And secondly, majorly in the first half, we have sold mainly in the Raipur area, or we have looked at other markets also?
No, we sell, close to about, say, a periphery of, say, about, maximum is about 100 kilometers. In and about Raipur, that's it.
And going ahead on the expanded capacities, how do we see that changing?
No, that won't change because right now there is pellet coming from outside Chhattisgarh. For example, Odisha is there. So that will stop. So whatever is, little bit of coming from outside, that will stop first. And see, again, it's a commodity at the end of the day. So if there is some price plus minus, so we shouldn't be surprised. But at the moment of it, I can visualize there is a demand supply gap. With the new pellet capacity, that gap will close down. Yeah.
And you want to put in any number in terms of how much DRI capacity has been added in India over the last 1 to 3 years?
No, I would. So I don't have the data. Let me get back to you on that. Let me check and get back to you on that. I don't have the data right now.
But we are very confident that of the incremental offtake also, we should not see any challenges given there would...
No. Actually, I know DRI capacity in Chhattisgarh at least because, being a small town, we keep talking to each other at the promoter level. So I know which guy is installing how much capacity, how much is still in pipeline. So that idea we have, but just to give you a data, exact number, I need to go back and come back to you on that. I need to check.
Okay, got it.
Yeah.
So lastly, just on the secondary steel, given that we have seen a significant weakness in billet and sponge iron pricing, do you expect this trend to continue in the third quarter as well and some pickup in the fourth quarter?
Hopefully not. See, I really don't know when demand comes, when demand goes. I still wonder currently what happens. But I hope demand comes back because the period has been extended now. It's almost been 5-6 months. So I hope as an industry, the demand comes back and the prices do go up. Otherwise, it will be a tough time for, as an industry, tough time to survive this phase. Yeah.
Okay. Got it. So thank you so much.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Manav from Yes Securities. Please go ahead.
Yeah, hi. Thanks once again for the opportunity. So just building on Siddharthji's question regarding 2 million ton pellets also coming into the market. Are we looking at exports as a strategy sometime down the line just in case there's an overflow of pellets?
Yeah, 100%. Of course. See, I always have, when I am in the exports, I do track the market. If you see, even Lloyd is exporting a little bit of pellets because of his current supplies. So exports are always open, and export market is, I would say, moderately strong at the moment. If you see, iron ore is well above 100. There is the amount of pellets in the market. So we are very much open for exports as well. If there is a challenge selling in the domestic market.
Got it. And have we, I think a couple of quarters back, we did have one shipment for the exports, but have we done anything during the first half?
No. See, right at the moment, export only happens when there is actually a necessity, There is no demand in the local market. We just to, sell the additional volumes for the time being. But with new capacity added up, there might be a situation where probably have to do, sell one cargo every month. So never knows how it plays. But we are very much open.
Got it. So second question is for, the CRM and the battery energy storage. I think for the CRM, we have already done with the order placements in the second quarter. And what's the status on the battery energy storage systems right now?
As Dinesh mentioned during the start of the call, so we have acquired the land in Aurangabad industrial area. It's called Auric. And signed industrial policy MOU with Maharashtra government. We should be getting starting the demarcation work and other infrastructure work during the next month. And from January onwards, we should be able to start work at the site in full throttle. Machine orders has started being placing in respective buyers, be it in India, be it in China. That should complete in next 6 months, and a line should be up and about anything between January 27 to March 27. That is the pre-trial commissioning all that.
Got it. So FY27 end is where we expect the...
So for both, for BESS as well as CRM, we've given the commissioning dates to be April 27, which is FY28. And we should be able to, meet that.
Got it. Sure. Thank you so much once again.
Thank you. Ladies and gentlemen, that was the last question of the day. We have reached to the end of the question and answer session. I now hand the conference over to the management for the closing comments. Over to you.
We would like to express our deep sense of appreciation for joining us on this call. We are confident that we have been adequately able to answer all your queries. Should you have any other further questions or need additional information, please feel free to reach out to our investor relations team at Go India Advisors. Once again, we sincerely thank you for all your active participation and support. Thank you very much. With this, we conclude this call.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your line.